Good morning. It is February 14th, Valentine's Day. And before we start the show, we've got something for any single guys watching. Make sure where we're looking for Valentine's Day. Joe, pull that up. Here we go. If we're looking for love, make sure to check your local plat book first. So fantastic. Markets are moving. We had a big move in the Dow. Looking at soft commodities are making big moves as well. Grains, right? Corn, soybeans can't find much love today. But as we look, we have other headlines. Brady's going to give us a cattle report. Farm income, big moves in the farm income as we could expect. The number of farms is decreasing. And Lyft stock, we've got an interesting tidbit there. And I've got just the guys to break down the news with me. Brady, Tommy. We've got Brady in Kansas. Tommy's at the Farm and Machinery Show in Louisville, so he's going to be audio only. But guys, let's jump right into it.
Morning, everyone. I'll hit the Lyft news real quick. So I woke up. We're looking at headlines. I'm looking at Twitter/X, and it said Lyft went up 65% due to an analyst wrote that there was a 500 point bounce in EBITDA, and it was supposed to be 50. And to think that Lyft's a heavily shorted stock, maybe I sent to you guys last week, but when I was in Nashville, Lyft has been trending down for the last few years, and Uber's been, people are long Uber, short Lyft. So Lyft has a very, very big short. The reason this matters is that it's just dirty. There's a huge short. If you were short calls and you look down and you realize it was up 65% in an instant, you got a major problem. That's a 4 or 5 standard deviation move. Anyway,
your opinion, Tommy, is that are you suspecting some foul play or honest mistake?
No, I just think pure stupidity. I think someone wrote instead of 5,500. I mean, be like the USDA saying that yield was 1,702 instead of 172. I mean, common sense would tell you it was wrong, but there's so many algorithms in high frequency trading computers that they jumped on that and panicked. Yeah. Anyway, that's my tidbit and contribution to the show.
And when I see something like that, AI is the big talk, the algorithms. But at the end of the day, when we're looking at any type of markets, commodity markets, stocks, right, it's still the human element. They're still going to be emotional, and we're still going to have the human errors in there. That's what I look at there. So, in the soft commodities, right, we've talked a lot about cocoa. It's Valentine's Day. Let's look at the chocolate prices. And cocoa price is close to double what it was last year. Raw sugar is up 20%, but guess who gets to pay with it? Reuters had a great article about Hershey and Cadbury, right? They're increasing their chocolate prices. So they're just pushing that increase right back to the consumer. It's very
going to be an expensive Valentine's Day potentially here. Box of chocolates. We got the box of chocolates index, Connor. We had the Krispy Kreme index and the tortilla index.
I might need to do the Cadbury. We're too late for Valentine's Day, but by Easter we could do the Cadbury egg index. I'll start putting that together. We'll get our research team on it.
Okay.
So other one, Tommy, you sent us this Nat Gas 3.5-year lows. We should break down, have a chart to show that, because we talked a lot about it this fall on Nat Gas. Had a little run up this winter, if I'm not mistaken. Now close to 3.5-year lows.
Yeah. Yeah, just abnormally warm across America as you go. Like Brady, I think you've been posting pictures. You look warm. The whole deal is just we're warm. I talked to a farmer client in Iowa, and he said if it would stay warm for another week or two, people put down a little fertilizer and do field work. So our friends up in North Dakota, real big shout out. These sugar beets they grow, they pile them. And they depend on them to freeze, and get super, super, super cold. And they're actually going to lose some of their sugar beet harvest because there's this giant, giant pile. And as you all know, like if you put a big pile of mulch, it steams and gets hot. They're having loss to the sugar beets, and there's nothing they can do. I mean, they're literally outside. It's normally -10, 0, and it's +40. So it's really affecting things. That's all.
Yeah. Other one, we'll one more outside market thing. Dow, we had it's rebounding a little bit today, but his big move down on the Fed rate decision, talking about, or inflation, I'm sorry, but post-worst session since March of 2023. So big. We've had a great run up, right? So it can't go up every day, but big pullback. We're already seeing some of that come back today. So let's kick it over to what we know very well looking at ag space. We had a couple articles just looking at number of U.S. farms falls and size increases based on the U.S. Census. So to be expected, right? That's been the trend for many years. But the one takeaway that I saw is we had the average age of farmers. Any guesses what it is, guys?
72.
I'm gonna like 62. Would you say, Brady?
You're both high, 58.1.
Boy, is that coming down, or is that
up,
what did
up 0.6 on the year from the last census in 2017?
Okay, interesting.
Yeah.
Yeah.
So let's do it. Let's keep moving forward.
Graphics that I saw on that same note, the number of farms kind of had plateaued. I mean, it's still light when you look back on long term, but like since the 60s, I think there was 2 million or just under 2 million farms, but it had kind of plateaued there. Interesting graphic in that article.
Yeah, we should pull that up. So the other thing we have, farm income, right? Big article. Farm income is seeing a historic drop. The inflation adjusted number 2024 to 2023 were 4% below the 20-year average. From 2022 to 2024, we are looking at a 41% drop, which would be one of the biggest drop of the past 2 decades. Here's a chart that reflects it. And so looking at it, right, we had some great income producing years the past couple of years. This year is looking at the opposite, especially today with March corn down 6 as we're looking at it. But the thing that jumps out at me, guys, when I'm looking at this is going back, right, looking at this historic drop, we're going back to the 80s. 84 was the last time we saw a drop this extensive. I don't like when we're looking at 2024 and we're comparing farm income to the 80s.
Not a good comparison. Very cyclical too. Something that points out on that chart there, how you have a couple back-to-back years of those drops in incomes, but cyclical.
Absolutely. And then same thing, just looking at farm income by year, right? 20 hindsight's 2020, 21, 22, 23 were great years. That 16 through 20, right? A little bit lower income, especially when we take out the government payments. And 2024 is looking like a big correction from previous years. So to me, my takeaways when I look at these is we talk about risk, right? We're risk managers. We look at risk for farmers. And I think if you ask the average farmer, what's the biggest risk for your operation? It's got to be big moves in the commodity markets and not being able to be hedged on the lows and not being able to participate in the big rallies. So that's my takeaway there. So
absolutely, yeah, good points.
Yeah, let's kick it over. We got the Ag Outlook conference tomorrow. I think we'll talk about a lot there, but we did have this article. Was it from Bloomberg, Brady?
Bloomberg survey here of analyst estimates going into that. What the trade's looking at for them to print. Might be some pre-positioning going into that Outlook forum Thursday and Friday. Last year, they printed a nasty number, and it really shocked the market and kind of sent things in a spiral. So maybe they're remembering what happened last year and trading into that going into this. But some significant ranges on the acreage and the ending stocks. We'll see what gets printed tomorrow and Friday, or Thursday and Friday. Yes.
Yeah.
On that.
To me, pretty safe numbers, right? 91 million acres of corn, down a little bit from that big number. Soybeans, right? Pretty average, not any wild cards, which I don't think we usually expect this early for acreage estimates, but it looks pretty good. Not necessarily bullish numbers, as we've been saying a lot. Brady, cotton acres, right? They really punted. Same last year, they're at 10.2. They're at 10.7. I mean, Luke, if you're listening, we'll feel free to chime in on cotton acres, but do we see, with corn prices continue to drop, do we see cotton expand on some corn acres, you think?
Yeah, potentially. In parts of we got 3 gens here in southern part of Kansas. We're very much on the northern end of the cotton belt, but there's a lot of talk about cotton coming into back into some of those acres. But guys plant what they know, and the predictability in tight years is often really important. And if you can predict what type of corn crop or a milo crop that you're going to grow, some of that predictability has some value to it as well. But could see some more cotton acres up here in the plains.
We'll keep watching that. So
real quick, Brady and Connor.
Yep. Yeah.
Good.
The USDA is going to tell the American farmer that they're awesome. they're absolutely awesome. They're going to plant a lot. They're great at growing it. They're awesome. They never come out and say, you know what, we think you're going to stink at farming. It's February 15th and you're going to be bad this year and the weather's going to suck. They're going to say, weather's going to be perfect. You're awesome. And that's why we could go over 3 billion carry out. And that's why we could have $2.99 cash corn here in the countryside in the next few months if something doesn't change. It's a very, very serious subject, and people get mad if you tell the truth. But I'd still like to be in business in 10 years and say we actually helped people when times got tough, not gave them the BS, aw shucks, we'll get them next year, Cubs fan type of deal. Anyway, that's my speech, and I'm sticking to it.
That's a good speech.
I love the analogy. I love comparing the Cubs to low prices. Let's group those together. That feels right.
Yeah.
So, cattle, Brady, you want to talk a little cattle?
Yeah, let's jump into some cattle here, because cattle have been the shining light. Grains, doom and gloom here in the dumps, but cattle have made a great recovery over the last couple months. There's a lot of bullish headlines, and I think anytime you see CNBC, Wall Street Journal, these mainstream media outlets reporting, on cattle headlines, you got to scratch your head and wonder, is the shoe salesman in yet? Is he long cattle? Is the bullish news all built into the market? We've shared this graphic here over the last week. A lot of headlines about the smallest cow herd since the 70s or the 50s even, in the last 70 years. But beef production has actually increased. So we're more efficient, making more beef with less animals. And this graphic does a great job of illustrating that. The next thing I'd highlight, just because, if there's a lot of bullish news, I like to come in and be a contrarian a little bit and share why you should respect the downside. Imports. There's some headlines about record Brazilian imports. Brazil slams us every year, Jan, Feb, March, with imported beef. They got a tariff rate quota. It's kind of a race to fill that, and they fill that in the first few months of the year. And you can see that with that red line in that graphic right there. JFM, they're bringing imports in, and then it kind of fizzles out. Now, the difference of today's market, high prices may encourage them to forego and absorb that tariff and continue importing just because of the prices we're seeing here. So we could see maybe that them exceed that tariff rate quota that they have in place. Australia, though, really sticks out on this graphic. In 23, Australia nearly doubled what they import or export to the U.S. and the U.S. market imported from Australia. High price is going to bring more beef in from other countries here. So I want to highlight that. The choice cutout, we've talked a lot about that. Been under a little pressure, was down a little bit yesterday. We've yet to exceed $300 on the choice cutout. That's the consumer pull, demand pull. We need that to pull fat cattle prices up and to trickle down throughout the whole cattle complex. These feeder cattle prices are screaming. I think there's a race to buy the last feeder, and but they don't pencil. Not all of them pencil. You're betting on the come or betting on a cheaper cost to gain if you're buying feeders at these levels here. And you may be right, but oftentimes in the cattle business, we make $300 on a pen and we turn around, we buy expensive feeders because we think it's going to keep coming. We're betting on the come and we give that 300 a head right back. We don't want to do that. This is an important graphic. Wanted to share with y'all. November cattle, it's kind of some seasonality, the 5-year average, the 10-year average, and the type of move we've seen since January 1st. We've seen 6% gain since Jan 1 on Nov cattle, feeder cattle futures. Just stands out like a sore thumb, that black line on the value we've added in November feeder cattle. And, there's maybe some peaks in June, July that we see seasonally, but you got to respect where we're at right now with those contracts and the value you can protect out there. That's what I got on cattle, guys. I think it's a great opportunity. I've been doing lots of LRP, getting lots of stuff covered up here for guys. It's been a busy couple weeks.
Absolutely. Yeah, sounds good. Brady, don't forget to call our friend Chris Swift too, who asked that question. Lot of excitement in cattle. I like talking to him. He's they have the good side of the coin right now. Quick question, Tommy, what's the most interesting thing you've seen at the farm show this year? Just the optimism of the farmer. They're looking at equipment that costs more than the average American's home, twice as much as the average American home, and they're still optimistic. You're not going to knock them down because of a few months of low prices. He knows a local guy going to switch cotton yet. Cotton prices are going nuts, and I think Luke's the one who got started when he started asking questions a few months ago. Cotton is absolutely in a bull market. There are some commodities that are in bull market territory. Corn, wheat, and beans are not any of them. Connor B, how do people get a hold of us?
Yes, sir. We'll be doing this again live at 9 every day on YouTube, Apple Podcasts, and Spotify. If you've got a question and you're not on the live show, please shoot us a question on the live show. We love breaking them down. But if you ever have a question, send us an email, info@atipromedia.com. Give us a call, 855-737-FARM. And I think with that, we'll let Tommy get back to the machinery show, and we'll get to work.
See you, boys.
See ya.
Thanks for joining us. We're here every day, 9 a.m. Central. Don't forget to like and subscribe. We'll see you next time.